A 2,000% stock surge in quantum computing. Is this rocket ride worth the risk? Imagine a stock skyrocketing 2,000% in just 1 year. That's the eye-popping reality for Quantum Computing Inc., NASDAQ QBT, a player in the quantum computing arena. A field projected to explode from $4 billion today to $72 billion by 2035. But here's where it gets controversial. Can a company with barely $39,000 in quarterly revenue justify such a valuation? Let's unpack the hype versus the reality. Quantum Computing 101. Why everyone's talking about it. Quantum computers harness the bizarre behavior of subatomic particles to solve problems even the most powerful supercomputers can't crack. Think drug discovery, climate modeling, or unbreakable encryption. Tasks that could take classical computers centuries. Companies like QCI aim to commercialize this tech, but not all quantum approaches are created equal. See Kami's unconventional strategy, betting on chaos. While most quantum systems require ultra-controlled lab conditions, think near-zero temperatures and vacuum chambers, QCI flips the script. Their Entropy quantum computing uses open systems that embrace environmental noise. Supporters argue this could sidestep scalability issues plaguing rivals. Skeptics, however, question whether this method sacrifices precision for convenience. Leadership shakeups, manufacturing moves. 2024 brought turbulence beyond the stock chart. CEO William McGann stepped down in April, replaced temporarily by Yuping Huang, former CEO of a quantum firm QCI acquired. Then in May, the company opened a quantum chip factory, aiming to shrink hardware to fix standard computers. But here's the twist. Can a leadership transition and unproven manufacturing scale coexist with investor confidence? Financials, a mixed bag of hope and red flags. QCI's revenue grew 44% year over year to $39,000 in Q1. A positive sign, but let's be real, that's pocket change. Most income still comes from research grants, though recent deals hint at commercial traction. An unnamed automaker bought equipment in April, and a major U.S. bank spent $332,000 in July. But here's the problem. QCI burned $8.3 million in operating costs last quarter, over 200 times its revenue. A $200 million stock offering boosted its cash reserves to $350 million with no debt, buying time to chase sales. The question is, will customers materialize fast enough? The valuation elephant in the room. QCI's price-to-sales PS ratio is stratospheric compared to peers like IonQ and Rigetti. This metric tells you how much investors pay per dollar of revenue. And right now, they're betting big on future growth. But with 2024 sales at $373,000, up just 4% from 2023, the verdict: high risk, maybe high reward, but wait. Quantum computing could revolutionize industries, and QCI's tech is intriguing. However, its stock price assumes flawless execution in a field riddled with technical hurdles. Rising costs, leadership uncertainty, and microscopic revenue make this a speculative play at best. Here's the part most investors miss. Even if QCI's tech works, commercialization could take years. Early hype often fades in emerging tech sectors. Remember the blockchain craze? Your move. Watch, don't buy for now. Add QCI to your watch list. If sales accelerate dramatically in 2025 and costs stabilize, revisit the thesis. But today, the risk-reward balance tilts toward caution. Controversy corner. Let's debate. Hot take. Is QCI's 2,000% surge a sign of irrational exuberance or a fair bet on a quantum future? Question. Would you invest in a pre-revenue tech company banking on unproven demand? Sound off in the comments. Agree or disagree? Disclosure: the author holds positions in IonQ. The Motley Fool has no stake in QCI.